We're excited to bring an opportunity to the table today, sponsored by BCAP, to invest in more alternatives. And just to kind of recap in terms of why alternatives and what place do they have in the portfolio, we believe firmly that adding alternatives to a portfolio does two things, right? And the expectation is one, to bring portfolio volatility lower, which is lowering risk, but not sacrificing on the return side. And hopefully, even by adding some alternative assets, increasing our expected rate of return. And so, where we sit in the market right now, obviously, stock market valuations have been very high. They have been for quite a while. We're not losing confidence in the market, but we just say, hey, these types of differentiated assets have a place, especially amid valuations being pretty high. So the opportunity here that we've been diligencing for a little while now and feel very comfortable with is a tax lien fund. Tax liens are a function of the real estate market. And so I have Matt Haraberta, our Chief Investment Officer. Matt, why don't you help us understand what exactly is a tax lien and what is attractive about it from an investment perspective?
Yeah, absolutely. So I think most property owners will be pretty familiar with the property taxes that they get, and tax liens really come as a byproduct for delinquent taxpayers. So typically, if you're a property owner, you're going to get either an annual or a semi-annual property tax bill, and depending on state, sometimes there's a small discount if you pay it early. Then if you pay it on time, there's no penalty. But for those people that don't pay their property taxes, there's going to be usually penalty and interest that's associated with kind of that delinquent tax. So what happens is that a municipality then puts a tax lien on that property because the taxes have not been paid. But the municipality typically will look down and say, hey, we have a budget that we've agreed upon for the next fiscal year. So what they typically do is that they hold auctions to actually sell these tax liens to investors. So we've partnered with Gondola Partners, who has an expertise specifically in kind of going to these auctions and purchasing the tax liens. And one of the reasons that we're so attracted to the asset class is that they're really an uncorrelated asset to both stocks, bonds, and really other alternative investments because there's a statutory rate that interest and penalty accrues that varies state by state. So that's a high level overview of kind of tax liens and why we think that they're an attractive asset class.
Yeah, great, Matt. And so help us also then understand, right? That's the investment opportunity, the purchase through these auctions. What do things look like in terms of now we own a tax lien? How are we getting paid? How do we get out of the security? What's that process look like? And from the tax lien perspective, and then we'll talk about the harvest opportunity after.
Yeah, absolutely. So when we think about kind of going forward, what's our expectation is we think that the tax lien fund, just by buying the tax liens, will produce a net return to investors of approximately 10%. The vast majority of all of these returns are coming from kind of the interest that's accruing plus the penalties. So the thing that we really like is that we are going to be getting consistent cash flow from this fund, primarily because 80 to 90% of tax liens pay off within the first 2 years. And the further out you get, obviously, the higher that percentage becomes. So there's a natural recycling of the portfolio because tax liens don't stay outstanding forever. But the thing that we do like is that the statutory interest rates typically are going to stay the same.
Yeah, and then Matt, talk a little bit about the securitization of the tax lien and where it sits on kind of the capital stack of that piece of real estate. I think that would be very helpful to understand kind of what's the risk profile of a tax lien.
Yeah, no, that's a great point. I'm glad you brought it up because that's one of the reasons we were so excited to do more diligence about this investment and this opportunity. Because if you think about kind of the capital stack of a home, typically for most people that are paying their taxes, your mortgage is going to sit kind of first lien, or that's the first thing that gets paid back in any downside scenario. Tax liens are super senior to mortgages, so they truly are kind of the first lien on the property. So if we think about the average tax lien, it might be between $5,000 and $10,000 for unpaid property taxes. Whether or not that home is really in good order or not, it's very unlikely that the value of the home or the vacant land or whatever the real estate is that we're purchasing the tax lien on is going to be below what is owed on what property taxes are owed. So because of that, these typically exhibit a very low loan to value. Typically, the average across the portfolio is about 7.5%.
Right, and that's first money off the table. So in a scenario where, like you talked about a second ago, 80 to 90% of these things work themselves out, right? Someone had a little financial hardship. they're still paying their bills and all. They need to accumulate or kind of have a time lapse between making the payment. Yes, they're going to pay the interest and penalties, but they don't ultimately want to lose their home. And so these things get themselves worked out, paid off before you ever enter into a scenario like that. Alternatively, in that same process, if someone said, "Oh, financially, I don't see a recovery here," and they take their house to be sold at settlement, that lien's getting paid off, like you
Yeah.
said, before the mortgage or any other creditors. It sits first in line to get paid, which is something we feel very comfortable with from a transaction perspective. Now, what happens if that homeowner forecloses? They can't pay their taxes, they can't pay their bills, and now we take possession of the property or and all. Matt, we're going to talk through that, and we're going to help investors understand our opportunity to invest in that, and that's the Harvest Fund, which we kind of look at this opportunity and say that there's some whipped cream and cherries on top of the Harvest Fund. The Harvest Fund's probably the ice cream and really what we're after, but this whipped cream and cherries could come along as a nice added benefit. So, talk to us, Matt, about potentially that harvest side of the equation.
Yeah, absolutely. So if we think about kind of the tax lien portfolio and kind of what Nick is talking about, that is the primary reason that we're interested in this investment. But as a byproduct of that, there's anywhere between 1% to 2% of those tax liens that have the potential of actually foreclosing and owning the property. So when we think about those potential returns, they're obviously going to be significantly higher than the 10%, but it's going to be a much smaller portion of the portfolio. In working with Gondola Partners, we have structured a partnership where we are going to get the opportunity to invest in these harvest funds as they come up over time. And again, we just think that this is something that's really going to drive higher returns for investors while we have the nice base of the traditional tax lien fund.
Perfect. Yeah, and I think the way we're kind of thinking about and prescribing returns it's a 10+% expected net rate of return to investors, and the plus percent is really driven by the harvest fund opportunities.
Yeah.
If we get those opportunities, we do believe we'll push returns meaningfully higher, but it's somewhat unpredictable in nature. We feel very confident about it, but that's how we're thinking about the return structure there. Matt, any other last comments before we're gonna host a conference call with Gondola Partners to go in this in more detail? Anything else for the group in this kind of intro video you think would be important?
Not at this time. I am looking forward to the webinar. We're going to make sure that we have all the key folks from Gondola Partners joining and make sure there's interactive with Q&A. And we'll have more information in the email that comes out. But no, I'm excited to talk with everyone about this investment opportunity, and we'll take it from there.
Great, thank you, Matt. Thanks for your time today. We'll be in touch with more information as it's available.